Shout out to Kiss.
Yeah.
Let's get into this. Shout out to MG the mortgage guy. He texted me today. We spoke a couple weeks ago, and he said, "I told you a couple weeks ago, 7% interest rates coming soon." So they just released numbers. 30-year fixed mortgage, 6.87% for the 30-year fixed. 15-year fixed is 6.15. So Matt called me a couple weeks ago, and I asked him how high he thought interest rates could get for mortgages, and he told me 7%. And it's creeping to that 7% level.
Sounds like 07 all over again.
Yeah. I mean, historically, think about
it's still relatively low.
Exactly. That's what I was gonna say. I was like, I had to humble myself, and like I'm thinking about obviously when my parents were buying a home in the 80s. Like we talk about, if you look at the interest rates in like from 1980 to 1990.
Yeah.
Like what?
Oh, it's treacherous. Yeah. The Nixon years when it was like 18%. Oh,
18, 15, 14%. You're like, how's this even? How does somebody do that? And it's because I was talking to Matt when I was trying to lock in the interest rate, and I was like, look, man, it's at like 4. He said, lock it in now. It's not, it's only going up. And so watching it go up to 7%, I mean, it's tough, man. It's tough. But perspective is key. It could be worse. Could be worse.
And Yahoo Finance reported sales of luxury homes dropped by 28% as a result from June to August.
Yes, they do.
I know everyone kept saying the market is not going to fall. No, if interest rates go up, this is common sense. If things cost more, people are going to buy less of it.
Right.
Especially if the price adjusts in 4 months, 5 months.
Well, this goes to the economic talk. So a couple of days ago, we didn't get a chance to talk about it because it wasn't Monday, but when the Fed raised interest rates. So yeah, I mean, the whole point of raising interest rates is to taper inflation. So, is it? It's done to make money more expensive. So that gets passed down to the bank. So when the Federal Reserve raises interest rates, then the retail banks actually borrow money. So that means that it's more expensive for the retail banks to borrow money. So now the interest products that retail banks offer, like mortgages, like credit cards, like different things of that nature, auto loans, are higher. So yeah, it tapers inflation because people aren't buying at a crazy pace like they were before. But it's a delicate line that you have to walk, because it's like if you raise interest rates too much, then you could break the economy. So you raise interest rates to stop people from spending, to lower inflation, but you don't want to raise it too high to, shut off the faucet.
Yeah.
And as a result, in this low inflation environment, credit card balances have went up to one of the highest levels of all time at $46 billion. Now, I want you guys to add that with the student loan bubble, and if those two pop, how much debt is there out in the universe?
Yeah. I mean, in addition to that, right? So back to the home thing, obviously when interest rates go up, it makes people tougher to buy homes. But if you look at the percentages, look at the percentage of people that are refinancing their homes, right? Like it wouldn't even make sense now, right? When you're locked in you're not going to try to lock it at a higher rate. And so that obviously that goes down as well.
But there's also it's never the end of the world. Because if you buy even if you buy now and it's a 7% interest rate, eventually rates will go down eventually, and you can always refinance.
That's when it would be a time to refinance. So I'm saying in this environment, it doesn't make as much sense as it did 9 months ago, 12 months ago.
Homework question for everyone. How often do interest rates go down when there is not quantitative easing?
Well, there's going to be quantitative easing. At some point, there's going to be quantitative. There's going to be another round of quantitative easing. It'll happen.
After these next two crashes, maybe 28 or 29.
It'll happen. You gotta let it go.
It's going to be a few years.
Yeah, give it some time to breathe. It'll be okay.
And if they're telling you they're tightening it, which that's code for destroying the new wealth, new money that got created, why would they put interest rates back at zero for new wealth to come out? They're not. It's part of the cycle. That's what, like when I told everyone go get that Ray Dalio book, like that was a super cheat code to tell you like what was happening. The Fed have, and I need everyone to realize this, every entity and every person is responsible for their team winning only. Even the Federal Reserve. They have their own best interest at heart when they're doing these things, as they should. You have to know what cycle you're in and where you fit in that piece in order to know how to play the game. So when I'm telling you guys about direction and timing and wave and lunar cycles and pyramids and everything, if you go watch every episode of Market Mondays, you had a blueprint. That's a scholarship and a hedge fund. You will know how to play this game accurately.
Yep. I'd be fresh as hell if the Fed's watching.
Always.
Shout out to 2 Chainz, another great orator of our time. Yeah. If words come to words, just stay fresh. Because you never know. If the world falls apart, look your best. Yes.
From a decent man.
Yes. Yes. I'll be fresh as hell if the Fed's watching.
Oh man.
Shout out to Titty Boy.
That is not literal advice for those of you that are partaking in black market activity.
So it's perfect. It's so
Especially with the wolves
right
out. Go look
perfect.
bummy.
This is high level
For the record. This for my team back home, East Chicago, Gary, South Side of Chicago, Nap, no, look bummy. Wolves is out.
Nah,
Houston, Wolves is out.
Oh man.
The Wolves is out.
I'll be fresh as hell if the
Shout out
Fed's
to ATL. Oh, shout out to Tip.
T.I.
Today's his birthday.
Today's his birthday?
Oh, for real?
Shout out to T.I.P., man.
Shout out to one of the greatest of all time that's ever lived, the best rapper alive, Lil Wayne, Dwayne Carter. His 40th birthday was yesterday. Shout out to him.
Damn.
Shout out to Weezy
Shout out Wayne.
F8. Oh, they got birthdays right next to each other?
Yeah, I remember it was like in the early, like 2007 when they was all hot. They had that big Atlanta party. It was like Jeezy had his birthday, and then it was T.I.'s the next day.
Man, I wish they would have did that Georgia Power album.
Yeah, shout out to them.
Yeah, shout out to Wayne and shout out to T.I.,
Tip.
a good friend of the show. He's been on
Shout out for Wayne.
our show. He's been on InvestFest.
Yep.
And just an all-around good dude, man. Very, very solid, good dude. We went to his first comedy show. Legendary.
Fun fact.
Talented, man.
Fun fact.
And low key, I'm not gonna say he found Thug, but he was one of the first people to embrace Thug. He saw something in him early, and Thug, like low key, brought Tip back for a second too. So like that, like Tip has a good eye for talent, like that he does not get credit for.
Free Slime,
Free Slime.
Free Gunner, Free YSL.
Yeah. But it ain't about the money.
Yes. Wall Street Trapper stated if Apple falls to $130, the market will fall apart. Do you believe this to be true? And if not, what price would be a sign
Shout out to the
of
trappers.
trouble?
Hey, Ian, let me give context for the people out there before you. I know you're gonna go crazy. All right, so market cap wise, biggest company, right? Has the biggest market cap, but weighted. So the percent of how much of the influence and dominance that Apple has on the S&P is 7%. So there's 500 companies. 7% is its weighted average. And on the NASDAQ is 14%. So just keep that in context. All right, Ian, I'm throwing it to you guys.
Yeah, shout out Trap. That's my guy. I appreciate him being on an episode with Peter. That was legend. I think that was one of our best episodes. Like the energy was amazing. But Trap, even Trap ad libs when we talk was like amazing. So kudos to him. 130 is gonna be a key level. Like I mapped out 120, 236. For me, a trap price will always be $8, $9, $10 apart maximum. But yeah, if it gets below 130, it can be tough. It can be really tough, man. I will start to worry about global depression at that point. Seriously, I would. Because if they're in trouble,
I
what
think
is to stop
I
the
think
other
it-
companies that are
your sound- your Wi-Fi might be a little chopped. You're like you're a little chopped and screwed right now.
They're trying to put you in the matrix, Ian.
Yeah, you're chopped and screwed.
Yeah, so it's at 150 right now.
So as we wait for Ian to get his Wi-Fi signal together, somebody had asked about I-bonds in the chat, and I actually wanted to talk about that because we did speak about that before. But it is a great way to hedge against inflation. The only thing with I-bonds, I think the most that you could put in is $10,000 for a year, but I do think you could put in $20,000 if you're married.
Got you right now.
So I-bonds are government bonds that track that go based off of the inflation rate. So yeah, it's a good time to buy I-bonds right now because obviously inflation is very high. So you'll be earning I think what's the percentage right now? I think it's like I don't know, it might be like 6%, 7%. It was like 7% a couple months ago. So that's good. It locks it in for 6 months at a time, I believe. But yeah, I don't think you can only put in 10,000. Well, I shouldn't say only because $10,000 is still, a good amount of money.
Yeah, you was dead on.
$10,000.
10,000 and 20,000 if you're married.
Yeah, but if you it is a good way to beat inflation or at least keep up with inflation, and it's definitely going to be paying much higher than any bank or savings account. So definitely something to consider if you're interested in that.
All right, so it says here that the limit for purchasing iBonds in person. So a married couple can each put up to 10,000 in the investment annually, or up to 15,000 if they both also elect to get tax refunds in paper iBonds.
So I believe it says 9.6% right now in chat. So, but yeah, 9.6%. That you can't really beat that.
Yeah.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.